What's up, everyone? It's Scotty with MoneyVest. So after a lot of requests from all the members and from all the people on Discord, we're finally going to be talking about this stock, this company that has been selling off pretty aggressively. And I do believe there's a lot of opportunity in this business considering how much it's already down and how much of a strong brand and moat this company carries. So as always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. I would really appreciate that. And of course, links to our Discord and Patreon is going to be down below if you want to access all the members only private videos. Of course, you can access over 40 plus ad-free content and videos, and of course, access to all the spreadsheets with our intrinsic values, my fair values, and of course, all the 20 plus Discord channels, including buy and sell alerts, options alerts, trade ideas. Everything is going to be included with the link down below. And our Christmas sale is right now going on. The coupon code is going to be Santa Rally, and you can get 50, 60 to as much as 70% discount on the courses as well. And do connect with me on Instagram. My handle is going to be CasWRP, and I do post a lot of interesting stories and updates over there as well. So the company that we're talking about today is going to be Hershey's company, ticker symbol HSY. And Hershey's company, as we already know, is one of the biggest chocolate companies in the world. So often called just Hershey or Hershey's, is an American multinational confectionery company headquartered in Hershey, Pennsylvania. Of course, it was started by Milton Hershey. And if you haven't had their best-selling candy, which is literally just the Hershey's milk chocolate, what are you doing? Literally, what are you doing? Because this is literally since 1894, that's when it was established, is one of the best selling, if not probably the best selling candy in the world. I think a good comparable would be Toblerone, that has a Matterhorn from the Switzerland, the Swiss chocolate. That also has a very much sort of a, probably like the same in terms of its relevance in the chocolate world. So Toblerone, Hershey's, I mean, these are some of the big brands when it comes to the chocolate world. So yes, we are talking about chocolates in this video. This is a pretty big chocolate stock. Now, going over to their products and their offerings. So our principal product offering includes chocolate and non-chocolate confectionery products, gum and mint, refreshment products, and protein bars. Snack items such as popcorn, pretzels, spreads, snack bites, and mixes, and pantry items such as baking ingredients and toppings and beverages as well. So it's kind of like a Coca-Cola, which has like their main product, right? What they're known for, which is Coca-Cola is known for the actual Coke, right? The traditional, original tasting Coca-Cola, but they have so many brands underneath the umbrella of Coca-Cola. Same thing is true with Hershey's. Hershey's kind of known for their milk chocolate, but they have so many other brands that they also sell, leading positions in, again, gummy, sour candy, Twizzlers, Reese's, ice cubes, like whatnot. I mean, they're definitely in so many different places when it comes to a lot of these candies. And of course, a lot of these different items that people love to eat all the time. And when it comes to gaining share, they are gaining a lot of share in this market, continue to gain share, 60 basis point increase. Versus the top 5 competitors combined, which actually lost a little bit over 2% market share. And this right here are the margins compared to some of the other competitors in this space. Kraft Heinz, we got Mondelez, we got General Mills, Smucker's Company, we got McCormick, Kellogg's, Kraft Heinz, as I mentioned earlier, Campbell's. A lot of them have lower margins compared to Hershey. So very, very strong gross margins over 44% and operating margins at over 23% for the business as well. When it comes to margin improvement, long term, they are expected to increase margins even further as they become more efficient and, of course, increase their operating leverage over time. Speaking of proven track record, adjusted earnings per share are up from 2017 to 2022 to a little bit over $8.52, up 12% on a compounded annual basis. So 5-year CAGR is a little bit over 12%. Operating cash flow is up 13% on a compounded annual basis, and dividend per share is also up 8.7% to almost $4 per share in dividend per share is what they're paying. When it comes to organic net sales growth, 10.4% increase in of course the price and the volume combined, and long term they are expecting both 3% growth in price and volume. Volume meaning how much they ship in units, and price, of course, is going to be the price of the item itself. So they are expecting a mixed blend of 3% growth in both price and volume over time. That's going to be the organic net sales growth. Now, the Hershey company has outperformed the S&P 500 since 2017. However, I would argue in 2023, of course, it has seen a pretty significant sell-off. So if you come over to HSY, you'll notice that we are obviously selling off. It is down, I think, a little bit over 30% from its all-time high. So you can see the consistent selling pressure, down another 1.6% yesterday, and from its all-time highs of well over $270, the stock is now down a little bit over 34% at the moment. So definitely selling off quite aggressively. Now moving forward, the third quarter 2023 financial results summary, net sales came in at just a little bit over $3 billion, up over 11%. And of course, organic constant currency net sales up 10.7%. Reported net income $518 million, up over 29, almost 30% on a year-over-year basis. And of course, diluted earnings per share up almost 20% to $2.60 for the business. Now, balance sheet is not the best. We'll come back to the balance sheet towards the later part of the video. But if you take a look at the strong visibility to consistently delivering long-term growth, they are expecting 2026 and beyond 2 to 4% growth in net sales, with adjusted earnings per share increasing by about 6 to 8%. So this is exactly what we're going to plug in for our analysis when we're trying to figure out the intrinsic value for this business. We're going to apply somewhere between 6 and 8% for the company. I'll go with about 7%. Now, when it comes to the total addressable market, it is expected that the global market size for this industry is expected to be between $200 and $300 billion annually. And Hershey's share of this market would be a smaller chunk, likely in the single-digit percentage ranges, because of the significant amount of competition that has in this industry. And North America, this is Hershey's strongest market, with over 75% of their sales coming from North America. And of course, North American chocolate market is estimated to be around $25 to $30 billion. And Hershey holds a significant share with 24% market share in the chocolate and 38% in mint categories as well. So definitely has a pretty significant hold on the North American market. Now, when it comes to the overall revenue growth, you'll notice that we have seen a pretty sizable growth here from 7.1 billion to over 11.16 billion dollars. And of course, gross profit also very nice at 3.2 billion, all the way up to $5 billion. So we have seen somewhat modest yet consistent growth here. And net income, operating income, also from 1.3 billion to almost 2.6. So it's more than doubled in the last 10 years. And net income, as you'll notice, has also gone from 820 million to $1.9 billion. So the company is moving in the right direction for a lot of things. Revenues, profitability, net income, everything's moving in the right direction, with shares outstanding going down from 227 million to $205 million, exactly what we like to see for most companies. However, the balance sheet is not the best. And this is where kind of Hershey's lacks a little bit, because it's got less than $500 million of cash, with total debt sitting at over $5.2 billion of total debt. So net debt's a little bit over 4.7 billion. And of course, we've got current ratio a little bit over 1, but quick ratio is under 1 at the moment. So that's not the best deal here. And debt to free cash flow a little bit over 6.6 for the company as well. Now, if you take a look at the valuation, it has compressed as the stock prices continue to sell off. We're now trading at a little bit over 19, almost 20 times earnings multiple for the business, with a price to sales trading at a little bit over 3, and price to cash flow at just about 14 to 16, with enterprise value to EBITDA at 13 to 14. So it's not terrible. Price to earnings, I would argue, is still a little bit on the higher side, considering that the PEG ratio, if you take a look, is going to be at 2.29, meaning that the growth adjusted price to earnings multiple is definitely a little bit more on the higher side. But the company, again, has very good margins, with gross margins, of course, 44%, net margins at over 27, or actually EBITDA margins 27%, net margins 17%. And of course, we do have very good return on capital, equity, and assets for the company as well. So net income per employee, in other words, profit per employee, is also increased by about 20-30% on a 5-year average basis, meaning that the company is becoming more efficient over time. This right here is going to be the forecasted growth from $9.53 to over $15. So if you plug it into our spreadsheet, we are looking at a growth rate of just under 6%. So 5.8% is going to be that growth rate for the business. And if we take into account, let's just say, the earnings per share, which is going to be about $9.53. And of course, the diluted share count is 205. Let's just call it 206. So $5.83 times 206, we're looking at just about $1.2 billion in net income for the company, right? Actually, it's 953. So let's just do that very quickly. $9.53. We're looking at $1.9 billion in actual net income for the company. So 1.95. And then of course we apply a growth rate of, let's say, 6%. 20 times price earnings multiples, a little bit more on the higher side. I'm going to go with about 16 to 17. Let's just go with 16 over here. Dividend yield, the company does pay out a pretty sizable dividend yield of 2.66%. So we can even go with 9.5% in the discount rate. 10% margin of safety is fine. Share dilution of 1%. And we end up with a fair value of close to $122, meaning that it is coming down to our intrinsic value. Patience is really, really important for this business because it is a pretty sizable, pretty good business, very strong brand and moat. It's just a matter of patience here for the stock price to maybe compress a little bit further. But I think a 6% growth rate and a 16 times P multiple is extremely conservative, and $122 fair value is more than generous for Hershey's at the moment. Right now it's at about $180. So it would need to be just about 30% lower than where it's trading at the moment. However, on a technical basis, though, I would argue it is incredibly oversold, with a very, very oversold RSI and MACD, as you can see over here. So from a technical standpoint, I wouldn't be surprised if there's opportunity already brewing for this company. Even on the monthly time frame, I mentioned that it is now coming down to almost its 21 moving average, or in fact a 50-day moving average. And of course, a much better deal would be closer to that 100 simple moving average, sitting roughly around $137 per share for Hershey's. So hope you all enjoyed this video. Consistent months after months, there's been a sell-off in this company. And if it continues to sell off even further, again, like I said, next support is going to be $137, $130 from a technical perspective. Very, very oversold even on a monthly time frame. And my fair value is going to be closer to about $122, $123 for this company. But this has happened over and over again. You can see the overall trend is still very strong. It has been consistently moving higher really, really well. So this right here is the overall uptrend of higher highs and higher lows. So I have no doubt that Hershey's over the long term is going to perform really well if they continue on this trajectory of gaining more market share and keeping their dominance in the chocolate industry. Let me know your thoughts down in the comment section below. As always, if you enjoyed it, found it helpful, make sure you drop a like, subscribe to the channel, connect with me on Instagram. Handle is going to be CastWRP, and definitely do check out the courses down below. Link's going to be in the description, and the coupon code Santa Rally expires after Christmas. 50 to 60% off on courses as well. And as always, happy investing. I'll see you all in the next video.